Good morning. It's Jonathan Barrett with the morning debrief. The current time is 8:09 and it's the 5th of the 5th, 2011. That's May 1st, the 5th of the 5th of May. Okay, what a night last night. A lot of moving and shaking, there's no doubt about it. And obviously some pretty happy traders out there, obviously with some of the recommendations that have been going their way. I guess a silver collapse, that is largest move in 3 years, just below that 40 down to 39. Gold also under pressure, copper under pressure, oil under pressure, and of course the Aussie dollar under pressure. I guess what was the reasons for that? I think there's a lot of things, long markets, euphorium still creeping through, people moving away from those risk aversion trades. So there has been this real settling process as a result of those markets. Those commodity markets have actually been hit. It's actually been a movement across the board, and that to me I think is quite interesting, particularly when we've got some hot spots. So this will actually provide some opportunities in some of those commodity markets, but we'll rummage through those a little bit later. Let's just have a quick snapshot as to what happened overnight, and there we go. I guess just looking at the Bloomberg, let's go back to the US here. We're just sort of down 83, 12,723. The S&P is down 9. Nasdaq was down 13. As you can see there, a little bit of talking, moving and shaking. But I guess when you look at some of the other markets, let's just look at the overview. It's pretty weak across the board. When in May, stay away. Maybe it's true. Top 50 in Europe was down 48. The FTSE was down 98. The CAC was down 53. The DAX was down 126. Local market got shellacked as well, down 22, 4,703. Probably expect those losses to continue. A lot of those losses to continue in Australia when the Australian market opens, primarily because not only the equity markets are weak, commodity markets are weak. So let's have a look at some of those. Okay, as we always do, let's have a look at the dollar index. This is quite an interesting move because the dollar index was relatively stable. It did have a little bit move to the top side. But if anything there, we're still bumming around that lower end of the range. So expect something there. An interesting quirk here, because I actually feel that what's left for the Fed to do, and I actually feel what's left is to allow that dollar to appreciate, because that will lower primary inputs. Lower primary inputs, profits come back to the companies employ. So if commodities are all in US dollars, then what's the best thing is to allow those commodity prices to come lower based on a strengthening US dollar. And I think that's one of the keys which I think will be addressed further down the track. It just makes sense. Okay, so let's have a look at that. The dollar index we've talked about. I guess let's have a look at crude. Crude on the hourly chart there. As you can see, it broke through that 110 area, spent a bit of time. Expectations for me are still to go a little bit lower. So we're just moving our stops down. Obviously, we've got some good positions in there in play at the moment. Copper's the same. Let's just want to see it take out this area. 412 to me is pretty important. 412, 408 takes that area, and she goes lower as well. Here's gold. Gold in itself, bit of a shellacking there, and it was a tough market to actually trade that gold market at the moment, but the weighted sellers obviously saw it lower. If it's a continuing move, then you'd be selling on a breakthrough 1508. Silver. Oops, there's a big move once again. The trend is there. It looks awful on the daily charts, and as you can see, it's an amazing move to wipe out so much value so quickly. And moving from $48, I think, which was obviously just a little bit higher than that, say $50, down to 39. That's $11. That's $11, and in retrospect, that's a 39% move. So that's a huge move. Anyway, that's silver, and not too many people have been killed on that because people have sort of taken some of the advice of us. Just so you're aware, the gold-silver ratio, which we suggested about a month ago, has actually done some good dividends, and I think if anything there, those dividends I think will show quite nicely. So the gold-silver ratio is one which looks all right, and probably expect that to continue. At the moment, we're also seeing a lot of weakness in the grain markets. Grain markets, I think, are certainly under pressure as well. That just seems to be a bit of a common theme, which is travelling through the market at the moment. But as I said, I think it's more of a relief across the board with what we're seeing and as a result of that, prices are coming under pressure. Remember, gold and silver very heavy, oil very heavy, and copper very heavy at the moment. The grains still remaining soft, but I think that'll represent the golden opportunity a little bit further down the track. Okay, now just in terms of economic announcements coming out, I guess the most important one today, we've got building approvals, retail sales, foreign reserves, all quite important. Retail sales, I think I'll be wanting to see a little bit of improvement. And in overseas, we've got factory orders in Germany. Bank of England announced its rates, 0.5%, no change there. And we're also expected to see the ECB announce any interest rates, but no change there. They're going to be stable at 1.25%. In the States tonight, we've got non-farm productivity, initial jobless claims, continuing claims. Remember, the big lead number this week is the unemployment rates. That's the unemployment rate in the US, and the market's going to see whether or not we've got sustained ability to continue to move on. And I think, to me, that's one of the key. That economy really needs to kick ass. If it doesn't, then we have got an issue. Okay, well, that's about it from me. I hope everyone has a great day, and we'll certainly talk to you tomorrow, and bye for now.